Good afternoon, everyone. It's Allie, Coram, and Ed Carson here with a look at the market for Thursday, June 22nd, where we saw the Nasdaq snap a 3-day losing streak with a tech-led rally today, Ed.
Yeah, so nice action there. We'll have to see how meaningful that is within this modest pullback. I want to take a look at MongoDB, Supermicro Computer, and Lam Research.
We will do that. First, let's take a look at the major indexes. The Nasdaq today up almost 1% by sessions close. The S&P 500 also logged a gain today of about 0.4%. The Dow was slightly negative, ever so slightly. The Russell 2000 down about 0.8% heading into the close here. So we're getting support at the 10-day line for the time being. For the Nasdaq Composite, of course, we know heavy weightings in those mega cap tech stocks, and it seemed like those were the names that a lot of traders were buying up today, Ed.
Yeah, so I don't think we should overthink this too much. This is probably a modest mixed bounce within a modest pullback within a bull market. And so, I mean, it's sort of like how much detail you can get. Like, so when you zoom in a little too close on a Google Maps, at some point it's like, let's just step back. What am I looking at here?
Yeah.
This is fine. This is all healthy action. If the market, this could be the end of the Nasdaq pullback, but if that's the case, then we're already close to being, extended again, in which case we'd very quickly run into that level. And that's happened before. I mean, at various times, like I remember 2020 and other times where we'd come up and we'd hit that wall and we'd bounce back and we'd keep on coming up and back. So that could happen, but but at the same time, maybe it's just good to have a bounce. Like we don't want to fall day after day after day. It's like, no, maybe we fall through, we bounce back somewhat a little bit, and maybe we go sideways, maybe we fall a little bit. So this all seems normal and healthy and doesn't seem to like really been a decisive day one way or the other.
Yeah, totally agree. Let's also take a look at the S&P 500 here, finding support at its 10-day line as well. But like you said, a modest pullback for the time being. And taking a look at the weekly chart here, it really would not be bad at all to see the S&P and the Nasdaq just pause here for a little bit and to have a modest decline for the week.
Yeah, we've had so many up weeks. This would look just fine. Nobody would be upset if we paused somewhere around here.
Yeah. Let's also take a look at the Dow. Here's DIA on pace for a decline of about 1% for the week, but essentially flat on the day. So it was really Tuesday that the bulk of the decline so far for the week has come in this shortened trading week, but all in all, holding around support levels where you would expect. Let's also take a look at small caps bleeding a little bit more here, Ed. At what point does an expected pullback turn into an expectation breaker that is just, a lot weaker and, more of a pullback than you would want? Would that be a close below the 21-day for IWM? What do you think?
I think for the IWM, I don't know look, this market seems likely to be tech-led and maybe led by a relatively narrow. I mean, what you want is have at least some decent participation. So while the market is pulling back, I mean, some areas that aren't as strong may break some levels, and that's just something to be aware of. And we want broad participation, but to be honest, the leaders are probably going to be maybe somewhat concentrated along the way. So, I wouldn't want to see this come through. I think the 50-day line is where you really would get really concerned about for maybe the general market. I mean, if small caps went below that.
Right. That makes sense there. And that would be well below this line that I've drawn here. So maybe a little bit of room to pull back there still. And you talked about narrow breadth. Here's a look at QQEW up 0.25% today versus QQQ's gain of 1.2%. So underscoring that top heavy leadership.
Yeah, I mean, Amazon was up 4%, Tesla and Google were up 2%, Microsoft, TSM, a number of names were like up at least 1.5%. Now, TSM is actually noisy, but it's like that kind of situation. So a lot of those big names, and there really weren't a lot of big losers among the major ones. And there was other things, cloud, AI. So yeah, but narrow leadership on QQEW. Would have expected that to bounce a little bit more, but losers definitely outpaced winners on the Nasdaq, and we're almost 2-to-1 down on the NYSE. So it really was a narrow day.
Yeah, and I mean, if you look at QQQ or the Nasdaq Composite, it really wouldn't be surprising to see a touch of the 21-day line. So maybe we'll get that, and maybe we'll get more opportunities to get into some of these leading stocks or add to existing positions. We'll have to see. And we already talked about the S&P 500's gain of about 0.4% today. Well, let's compare that to our SP, which was down on the day by about 0.4%. So yet again, signal of that narrow leadership there. Chips and software, we got to check in on those. SMH up 0.5% today, and IGV up about 0.6% here today as well. Ed, your thoughts?
I mean, yeah, it's just nice to see just sort of bulls bouncing back. This may not mark the end of it. You know, it's trying to find support on the 10-day line. Maybe they come to the 21-day line, but it wasn't decisive one way or the other.
That makes sense. Well, speaking of software, let's take a look at MDB. This is MongoDB. We've been keeping tabs on this database software stock really since that explosive gap up on the quarterly earnings report, with huge volume behind the move, and especially just given how tight it's been trading in quieting volume, holding essentially all of that gap up there. And it did move above a trend line today, Ed, with a gain of about 4.1% in volume. That was pretty high here today.
Yeah, they announced an expanded partnership with Google Cloud. They also announced a bunch of AI things. It came down intraday, like certainly after the open, just a few cents from the recent lows. So it bounced off after a few minutes. It was just a few pennies above where it had bottomed, then it came up. The one thing is that, you know, this, even though the Nasdaq closed essentially at highs, this backed off, and a number of some of the bounce stocks today came off their highs. You know, those two trend lines, you got that downward sloping trend line, or you've got that trend line over around 389. You know, so it sort of closed in between like 389 and 385, which were a couple areas where you could have bought it. So either if you bought it reasonably at those levels, like if you show some strength, you're either down for the day slightly or you're up a fraction. So that's just something to watch. If the Nasdaq resumes its slide, this and some other names could be in trouble. But this also might be your chance. This might be your chance to add a few shares or even start a position. So it's just, you have to know that there's some risk at this level. But, you know, strictly on the stock itself, it looks really, really strong, really enticing.
Right. And it's looking like it's on pace to close above last week's high. Potentially, it's a little bit below that now. We still have that round number at 400 above us, and we are above sort of that meat of a 3 weeks tight here. And we've got a high tight flag forming, Ed. So for traders who want exposure to this area, it seems like it's not wanting to go down in the market pullback. But perhaps timing is something to keep an eye out for this one.
Yeah, and with all these names, like, you definitely want to watch them. This is the kind of action you want to see. You want to see them showing strength, especially when the Nasdaq is bouncing like this, to at the very least hold up as much as they can.
Yes. And next on our list, let's take a look at SMCI and take a closer look at the daily chart here. We talked about this one as well during IBD Live this morning, right when it was starting to bounce off of the 21-day line. And this bar was a lot smaller. I think it was up some 2-3% when we were talking about it, but then it gained as much as 8% or so intraday and kind of squatted by the end of the day, Ed, closing low in the range after that initial morning burst.
Yeah, so this is one of those to be continued. Is this going to be one that looks great, you know, in another day or two? Because, and you know, it's just a squat and it's going to bounce tomorrow. It hit resistance right at the 10-day line. There's some recent trading. This is an example also of why you want to be paying attention. If you want, and if you just say, hey, if this moves, I want to get on it, because you probably could have argued that, you know, yesterday's high was sort of the place to get into it, you know, which is also sort of where the trend line was. And that's, if you did that, you're probably about even at the worst. I mean, and if things had gone well, you would have had a lot in there, but this is why you don't want to wait. If you bought this at 235, you might have felt
Yeah.
pretty good, but only for a few minutes. And now you're sitting on a pretty decent loss, even though the
Yeah.
stock is acting fine. That's again the timing thing.
Mhm.
So it's definitely want to be engaged with the market and be prepared. So you're not just looking around and go, hey, this is up a lot, let me go buy it. That's not. This is not. This has not been a market where that has been a great strategy.
Yes, laser focused entries are ideal. Now let's take a look at LRCX in the chip space, an upside reversal right around the 21-day line, which coincides with that 600 level, Ed. So your thoughts on how this one fared today?
Yeah, I mean that sort of undercut the 21-day line, came down there. That was nice test, bounced up there. You probably could have used yesterday's high or the 10-day line as a place to enter. It didn't move a whole lot much more than that, but it did close near the highs of the day. There was also the 21-day line. A lot of its chip gear peers showed some nice action, and also, if we look on a weekly chart, this one has a 3 weeks tight. So there's a lot of little things. This one's consolidated a little bit more, rested a little bit rather than some of the other names. But yeah, this is definitely a way to be playing this one. It might end up have a 4 weeks tight. It's got a 3 weeks tight right now. So there's all the question is, it was like something Scott St. Clair was saying on IB Live. Do you invest in this? Because somebody was saying, oh, this is part of the AI wave. But it seemed to be more like, well, chips are making AI chips, and this is a chip gear maker, so it's going to sell the chips. Do you put it in something like this, which may do quite well over time, or do you wait to have an opportunity to say, let me get into NVIDIA or one of the really big names,
Mhm.
and see if that's the way to go? So those are the kind of trade-offs you have to do. This one
Yep.
was actionable today, whereas NVIDIA was not.
Yep, exactly. Well said there, Ed. That is it for today, everyone. So we will cap it there. Thanks so much for tuning in. We will be back with more tomorrow morning on IBD Live, where we will be joined by Brian Shannon, and we'll have him share his screen, market technician that uses the anchored volume weighted average price to find levels of interest for shorter term trades. It's always fascinating to get his take on the market and stocks he's watching. So really looking forward to that. Investors.com/IBD Live for all the details. We'll see you there. We'll also see you right back here tomorrow to cap off the week. See you then.